Let's review our schedule for this weekend. This is the podcast tonight, Friday night, December 11th, 2020. We'll do the weekend report review tonight. Tomorrow at 10 Central will be the OWL True Storytelling Roundabout. I will publish the link for that in a few minutes on Patreon. That's the topic for the True Story Roundabout this week is resilience. What it means to you, what it means in your life, and how you get it, how you use it, and insights from and we'll do personal sacred stories on that at 10 o'clock. I'll be, I think, talking with the Swing Trade Mastermind tomorrow early afternoon. I'll do the Saturday night podcast at 8 p.m. will be the Swing Trade Portfolio Review. I'll be looking at weekly charts on the stack of symbols to see what we can see. And then Sunday will be the review of your trade frames. Ken Hum, I'm going to make you start briefing some of those. I'm doing all the briefing on your charts, and I appreciate the work you do on them, but you need to start carrying some of the load here, man. Stop hiding behind, the internet. Need to get you up here talking. So be ready. Be ready to brief one tomorrow. All right, let's see what we got here. All right, so today was the fourth day of selling, or I guess third day of selling. We spent most of the day outside of the Dragon and rallied in the afternoon to close right at the southern skin of the Dragon. But this continues the trend of the last couple days of a slide downward. That's the same pattern that we had here, which after 4 days resulted in this move. So we've got 4 days down here. What's it going to do? We don't know. It could be, if we take this same pattern here, it could be somewhere along here where it holds support at the PSAR, and then comes up and I would say probably challenges the all-time high. And then we'd see, would that retrace again, or would it go higher? Or if it does retrace, does it not even get as high as the previous high? So then that would start to be rolling down. Or instead of the upward move, do we get a sideways chop? Or do we get a break of the 10-day low? And going in on Monday, the 10-day low was today's low, because we will lose that the 10th day back. And so I'm showing the 10-day low being up here at 363, vicinity of the PSAR from today as well, which held briefly. But so the PSAR is now pushing this thing from the bottom. And remember how far away from price the PSAR was at first. It has now caught up to the price action. We notice that even the RL30, which had been very strong and up, has now rolled over. And anytime I see the pinching coming together, that suggests this is really weakening a lot. Even on this little sell-off here, you did not get the RL30 and the PSARs pinching like it has here. So this is starting to run out of gas. If the 10-day low at 363 doesn't hold, then the next level down is the Bollinger Band mean at 357, and then it's a long slide down to 346. So there's only a couple, fail-safe support levels left. Now that we're up here challenging the PSAR. So it's 10-day low and then the Bollinger Band mean. But now we're kind of well back into the river. And this is a B trade, B minus. And if it crosses below the PSAR in a 10-day low, it's really a C trade. So this is just about done, unless there's some kind of breath of fresh air on Monday. All right, let's take a look at the sectors, see how they did today. Good soccer practice tonight on painkillers. So the S&P .12. The Russell gave back more at minus 0.49. The Dow was marginally up at 0.13. Treasuries up a third. Still underneath 160, that key price level. So this was just some backing and filling by the Treasuries. Not really decisive weakness in the indexes. So the lack of panic selling in the indexes is actually could be seen as a positive. And so we're not, it's not dangerous yet. Although if that 10-day low doesn't hold and the Bollinger Band mean doesn't hold, then it's really the gild will be off the lily, as we would say. No longer shines, right? All right, let's take a look at the upside. There wasn't so many sectors outperforming the S&P today, but we had Japan up 0.21, wheat and precious metals 0.37, and really then the VIX 3.7%. To the downside, everything else. The FANGs and the quality low volatility. You had a collection here of tech, silver, and healthcare all down between 0.2 and 0.4. You had oil minus 0.53, materials 0.57, Brazil 0.67. Emerging markets in Mexico down 0.7 and 0.8. Finance, energy, clean energy, Ackman's hedge fund, and steel all down between 1 and 1.5. Getting weaker with oil exploration, 1.9. Commercial real estate, 2.81. U.S. steel continued to crack at minus 2.8. Bitcoin down 4%, but still above 20, so that's a good thing. Then if we take a look at the companies that underperformed today, are a pair of energy or electric car companies, NIO and Nikola Motors and Tesla. So NIO and Nikola down 7 and 5% respectively. Tesla down 2.7, still above 600, but showed a little bit of resilience into the close to stay above 600. But next week's going to be decisive. In the materials sector, you had Alcoa, Cliff, U.S. Steel. So you got to get those when the getting is good, and I think the getting has been got. It's already done. Devon Energy 2.5, Boeing and Win 1 3/4, Nucor Steel minus 0.8, Apple minus 0.67. Here's our two tech sectors. The triple techs. Here's the triple NASDAQ minus 0.7, and the broad triple tech TECL minus 0.51. So broad-based weakness across the board with all our faves. Right? The ones that actually did well today, you will recall my discussion of Microsoft yesterday. if you were here. Went on and on about droning on that one. And that one paid off to the upside. There's Amazon and Twitter doing well. McDonald's was the other one I raved about. Let's see what that is. Oh, there it is. McDonald's. Pretty much like the rest of the market. Nothing really to speak of. Minus 0.13. Wonder if this will show McDonald's for me. Or I'm sorry, Microsoft. I'm going to look at it. We'll try to. Well, I'll cover that one tomorrow. We got some things to do. All right, let's. I want to take just a couple trades to review here. So this one I thought was. This one is an essential flashcard. All right, so here's what I want to talk you through this one. So this is in Brazil. So you will recall me just raving like a lunatic yesterday at the trade that I missed in Brazil, compounded by the painkillers I was on last night. And I vowed to endeavor to persevere, to not let that happen again. So here's where Brazil closed at around 37.40, and his VWAP is up. His VWAP was down here, but this is where Brazil closed very strong. And then today it gapped down significantly, 60 cents, and then sold off to a swing low. So this is the size of this gap is instructive. Now that's the gap that's got to be closed if this thing is going to work. And so one of the things that we can do is start estimating reasonable profit targets as I go through routine management tasks. So I always treat that RL270 as a reasonable adaptive price target. So that's marked off by these purple dots as we go. So all this price was lost at the open and the gap. Then what I want you to notice is this thing here. This is the kind of this is the kind of bottoming price action that suggests that this might be an intraday support level. So you got the RL10s trying to hold and reverse here, and now you notice here that you've got a low, a higher low, a third higher low, and then that really looks like it forms a support level in here. And now you have the dragon has rolled over, and now you have the RL30 has rolled over and sloped up. So this is actually owl territory in here, because the owl requires you to have a unambiguous move, a P1 outside the river, which you have right here, the RLXD, then the dragon has to roll up, and then the RL30 has to roll up. So an entry here is certainly an owl. You could argue that this is an owl here, or anything in here is an owl. I took this one. Why? Just because I liked the way the RL10 was grinding up, and I didn't mind buying it at the VWAP. And so all through this management process here of evaluating opportunities and whatnot, I'm treating a return to the peak of the RL10 as a reasonable price target to get to over here, because it got to there before and couldn't go any higher. So it could get this high and stall, because the last time it got that high, it stalled. So that's a profit. That's a price target. But then also, this would be a price target. And then later, when this thing is moving out, then this becomes a price target. So at this moment, at the yellow dot, the long-term fair value indicated by the RL270 has come down. So the price action on the move up has now met the decaying price action on the way down. However, this still remains a reasonable price target here because it may decide just to get through this statistical move and then close the gap. So that's nothing more than closing the gap, and that's not unreasonable. And the size of the range stat allows it to move that far without being a surprising move. So that's there. So I want you to just notice that at this moment, at the yellow dot, we've been managing various estimates of reasonable price excursions all the way through this management process, which culminated in a decision to buy here when it crossed the VWAP, and spring has turned to summer. So when that happens, I pick as my execution risk the PSAR dot, and when I look over here, that's about 7 cents. So that's about 7 cents worth of risk. That's about 0.5% on a $36 stock. But if this were to fail, I don't need further confirmation that this thing is not going up, because if this breaks, then that whole support level is about ready to break. So I don't need any more adverse price action. So that's what I mean about that's what I mean about a minimum manageable risk box. Jason asked me, was I looking at is that Disney? SDIS up 13%. No, not on my list. Nothing that I had prepared. Not one of my usual suspects. So the entry here is an OWL entry. It has about a 7 cent risk. By this time, I'm looking at the Z3 pinch as well. You notice that this Z3 is pinched here. So from this entry, I'm looking at a reasonable price target. The first one is to get to here, and that's about 2-to-1 execution risk. So I don't mind that. And I will just tell you that, when price gets to here, I should probably have my stop at no lose plus dinner for 2. So if I'm just using the standard Wu Wei exit, my initial stop is here. Now I get 1, 2, 3, call it 4. Maybe that's 1, 2, 3 there. 3 dots above my entry. And now my Wu Wei exit can move here. And so now my stop will be at that level until such time as the Bollinger Band mean picks up. And that's, probably 4 to 5 minutes from now on, right? So I would now just draw your attention to this box by first saying, when price is in the yellow, it moved through my stop, or moved through my, I'm sorry, not my stop, my first price target. Now it's moved up here to this decaying RL270, and I'm already in the yellow box, and I'm holding the green box as open profit, and the Wu Wei exit strategy has me preserving about 1/3 of the gain. So if you take a look at that green box, a Wu Wei exit here preserves all of this stuff below it, but it's willing to give back, this much in the Wu Wei. So because I'm at that next level of price target, I really go through this thought process all the time. How much of that green box am I willing to give back, even though this thing has now, it's now testing this price level over here. I mean, it's already tested that when it gotten through it. It's now above that, and now the next move is the move up to close the gap. So I'm hoping that it will go close the gap. That would be nice. But while I'm hoping for, let's say this, let's call this the blue. I'm going to make that a blue box. I'm hoping for the gains of the blue box, because now that it's above the gap, closing the gap is not a surprising move. That could easily happen. So I want the blue box, but I'm holding the green box, and my Wu-Wei exit, my stop, is right here. So now you have a sniper decision to make. Do you want to tighten that up to keep 2/3 of it by moving it there, so I'm under the 2-bar low? So now I'm only willing to give back, that much. So one of the things that you've got to decide in your personal exit strategy is, under what conditions do you activate your sniper? Is this a condition where I would activate the sniper? Absolutely. I absolutely want to lock in 30 cents a share on a 7-cent risk. I'm not afraid of that. So I like moving my stop to here, just because I like to keep the gains, and I know how to re-enter. Like if this sold off, hit my stop, and then reversed and went higher, I can re-enter, knowing that that's an indication that maybe the blue box is in play. So one way to think about this is, how do I evaluate the reward to risk opportunities in the yellow dot with this pattern? If I didn't own the position already, would I buy it here hoping to get this? And if I did, where would I put that stop? I might put the stop right there. I might put the stop here where the Wu-Wei exit is. That's probably what I would do, because that still gives me 2-to-1 reward to risk to the upside, and it gives the protective cover of the dragon and the PSAR dots, to give it enough room. But I could also, appreciate a position where I was willing to risk like a 2-bar low and buy the position at the yellow. So holding the position at the yellow, like if I was going to buy the position at the yellow and I had my stop here when I didn't have any profits to protect, why would I risk more of my profits than I would if I was just buying the position? So that kind of mentality of, would I buy this position that I'm already holding, that helps you psychologically assess the value of the gains. And because this thing has already sold off harshly today, I'm more than happy to lock in the gains. And most of the rest of the market was down in the morning. So this is one where I would activate the sniper and move him up to this level and keep holding it here. But I would tighten that up to that price level. So I go through this just to kind of show you the different management decisions that you will see me making and talking about as I go through the, evaluating opportunities of when to buy, why the owl is such a nice relaxing entry. You'll notice that comes in at 10:15, so it's 45 minutes into the day, so all of the opening shenanigans are over. I'm not in such a hurry. Alex Resso said, why don't you take all of the RLXDs? I'm not trying to trade a lot. I have to have really good reasons to put my soldiers and my dollars at risk. So it has to really compel me to want to get in, not trying to trade as much as I can, but to be selective about where I come in. So this is just an owl entry on a morning hook. Big gap down, orderly sell-off, held support for 20 minutes. Rising series of lows. The dragon rolls up, the 30 rolls up, crosses the VWAP, bam, in. Now my stop is here. I get 2 execution R, and that's good to go. Where's the one I want to show? Shoot, is it here? Yeah, okay. So, but I gave you my analysis. So this is a chance for you to do a quiz. So this is that same location. Here's a 1 bar low, a 2 bar low. Here is the bottom of the dragon. Here is the PSAR. Here's just below the VWAP. We call it the Bollinger, and we'll call it under the Bollinger Band mean. So where would you put your stop? At 4, 5, 6, 7, or 8. Now, if you didn't own this position yet, or if you own this position from, I'm going to say, I'll give you credit for the entry. Let's say that you bought it where I did, which if I recall was here. And we want to talk about where you would add a second position, because now we think there's reasons to believe that this thing could go up and close the gap. So we think it could gain there. Where would you put your second position? A breakout above here, breakout above the RL270, or a breakout above the current Z3. So let's call that an additional entry at 1, 2, or 3. And so here's our, this is the situation that we're in right there, right? So on your little sheet of paper there, now you suffer. You know, where do you put your crap, sorry. Where do you put your risk? Is it here? You know, is it at 5, at 6, at 7, at 8? How much room do you give that? All right, so go ahead and lock that in. How much do I personally risk on OWL entries? That's covered in the course, what my personal risk management is. $400 per trade. Every entry that I make on any system that's a production system, I'm risking $400 standard risk per trade. That is a small fraction of 1% of the portfolio at risk. I'm comfortable with $400 of risk per trade. All right, so Ken Hum, I see you in the list here tonight, so I'm going to put you on the spot, Mr. Smarty Pants. And Chi Wing Chong too. You've been around long enough. Time to start torturing you. First, tell me what stop you put in place: 4, 5, 6, 7, or 8, or something else. And then tell me if you're going to re-enter with a second position. And if you do, at 1, 2, or 3. I'm going to give you 20 seconds to figure that out. All right. So let's see. Chi Weng Chong and Chi Weng and Ken Hum both chose 5, like the 2-bar low, as their stop. No, let's see. Let me make that better. Sorry. So they decided that would be their stop. So their risk would be here. Let's see. Chi Weng decided he would execute another trade at 2. And Ken Hum would pick one at 1. Okay. So let's see how that played out. All right, so Ken Hum gets in with another position here because he entered at 1. Now both of you are in. Let me get this out of the way here. We'll just clear the deck. So Ken put an entry right there. Chi Weng joins him right after. So now, I guess I should ask you if you're going to put a third position in. So now what you notice is after your entry, this thing went as high as this, and now has started to come back down. And now is like right here. So now I'll give you the opportunity to decide what you have. 2 positions on. You had an initial position, which I gave you, good soul that I am, right there. And your initial risk was here. So that this is what you're holding right now. You know, your gain is this. And really, just if we went from your entry, Ken, that's what you're holding. Chi Weng, that's what you're holding. And your stop is still well down here. So now I'm going to ask you, where would you put your stop? The first one is, hey, it's already collapsing. So if it collapses another penny, or no, number 1 is you would just take it. You would try to keep no lose plus dinner for 2 for Chi Weng. This is no lose plus dinner for 2 for Ken Hum. And this one moves your stop up to, let's say, that would drive you crazy if you did that. So 1, 2, 3. And if you choose 4, you're just going to cash Ken Hum. That would be about 1 execution R win. That would be about no lose plus dinner for 2 for Chi Weng. So tell me what you want to do. Where would you adjust your stop? If you have a different place, then tell me. And if you're playing along at home, Ken Hum would move his stop to 3. So essentially, he's on a 1 bar move. He basically makes this move to lock in a catastrophic win. That's a good time to implement a sniper move, in my view. And Chi Wang moves his stop to 2 and reduces his risk to just a fraction. I'm going to tell you, move it just to there. If you're not going to go to 3, at least don't lose money. That little difference right there is insignificant for the results of that trade, but compounded over all your future trades, that is an enormous psychological difference. So I'm going to have you move that to 2.5, okay? With your permission. That's what I'm going to tell you to do, but you're going to do what you're going to do, and that is you've got it at 2. My advice is, if you were going to go to 2, that was kind of a trap. I would say go to 2.5. So let's see how this unfolds. Yeah, and Ken Hum gets this trade. Chi Wang, you would have lost a fraction at 2, or you would have gained like a no lose plus dinner for 2, or you would have lost a little bit. So that's the difference. Over 100 trades, if you're making that little bit, yeah, that little no lose plus dinner for 2, it's just, it's like, I got paid to take a risk. They paid me $50 for opening a free lottery ticket, and so I didn't win anything, but I get $50 for the trouble, as opposed to losing $50. If you don't want that $50, I'll take it all day, every day, on every trade. So that's the lesson that I'd like to really install in your head. So now what I notice is the following. This support level down here, there was a strong move up to and a little bit beyond that RL270, but then it rolled over, crossed the dragon. I should have stopped and asked you, hey, who would have been interested in getting short in here, especially with the previous long sell-off. Whoops, that previous long sell-off. The big gap down and then the harsh sell-off, and then it didn't close the gap, and now it's starting to sell off again. This yellow dot is the first place that you would consider getting short, with the target of the VWAP, the Bollinger Band mean, and then the VWAP. And that's actually tradable. But we couldn't get to the 0 state fast enough. Maybe something else got our attention. So now the question would be, oops, here's an opportunity for kata number 2. In this yellow, that yellow right there is buying kata number 2. Why? Because you have this swing low down here, and now you have this higher low on the belly of the RL10. You have the RL crossing the baby dragon. It touches the dragon. It crosses the dragon here. It's crossing. Oops. It is crossing that VWAP once more. So now the question is, would you buy this right here? I'll let you buy it on that crossing point. Would you buy it on a breakout from the river? Would you buy it on a breakout of the dragon? Would you buy it on a breakout of the RL10? So let's call that 1, 2, 3, 4. And if you do, would your stop be at the Bollinger Band mean, below the dragon, below the RL10, below the Z1, or below the VWAP? So we'll call that 5, 6, 7, 8, and 9. Okay, Ken Hum and Chi Wing. If you were to, are you interested in buying this? And if you buy it, where would your entry be? 1, 2, 3, or 4? And then if you bought it at 1, 2, 3, or 4, where would your stop be? How do you frame that trade? Ken and Chi Wing both buy it at 1, so they're ready to buy it right now. Excuse me. So they're both buying, and Ken Hum is with a risk of at 6. At the belly of the dragon. Chi Wing, where would you be for your stop? Chi Wing has got a stop at 7. Okay, so we'll just put that in there. Now make a decision. If you were going to add a second position, would you do it at 2, 3, or 4, or higher? If it's higher, let's call it maybe if it took out this piece here. Call that 5. If you would add a second position, where would you put that in? Yeah, Chi Wing points out that his stop at 7 is the RL10 low, whereas Ken chose the low of the dragon. Chi Wing is at the belly of the RL10, so I don't disagree with any of that. Chi Wing's looking to add a position somewhere in this region. Either 2. He would like to add a position at 2, but not later than 3. So I'll say just kind of in there somewhere, right? Ken Hum would add at 4 on a breakout above and a breakout above the RL10 at 4. So that's Ken Hum. Okay. All right, Ken, you're out at, you're out at 6. Chi Wing, you are not out yet. Now, Ken Hum, would you go short at 6? Would you stop and reverse on a supported winter crossing to the downside? No? Okay. Just wondered. If I looked at this one, the interest I would have in going short would be because of the magnitude of the sell-off. And then this now has a high and a lower high, and it just went into a winter. And then I'm thinking, well, it could get to the VWAP and maybe gets back to this support level here. So a short at 6 would be trying to capture that kind of move. And that would be getting short at 6 is a collapsing dragon, which is my favorite trade. Chi Wang, you are still in this trade, and you're out of the trade. And so it goes. You know, here's a supported spring crossing. Here is a Kata 2. Both of those pay off. And so the sequence, if you stay with this sequence, you take a fraction, you get a really nice gain on from here with your second positions both making money. And then if you lose one execution R in here, but you would make already 3 or 4 more from this position here, and maybe 2 more from this position. So that could be 4 execution Rs. And this is just getting ready to go because it just took out the previous hump of the RL10. So that thing is, so now you're in the position, I've got 2 positions in hand and ready to go. This thing could be massive. And it still may be making the move up to yesterday's close, which is here. So this thing could still get that much more on 2 positions in hand. So that could be interesting and amazing. So that's where we are at 11:15 in the morning. Now here's where we are in the lunchtime. It didn't go any higher, it just kind of mucked around, and it got into a sideways quiet channel here in EWZ. And now we have a low, a slightly lower low that held support at the VWAP, a higher low, and now we have a Kata 2 formation here if you want it. Do you want it? That's the question. Do you want that? If you do, you're buying it at 1. If you want to wait for the RL10 peak, it's at 2. 3 would be the previous RL10 peak up here. So those are your 3 potential entry points. 1, 2, 3. Oops. Your risks would be, see, the tightest one might be, let's call this the belly of the dragon. Let's call it this one here, and the third one maybe down at the previous swing low, or let's call it the VWAP, okay? So that would be 4, 5, and 6. All right, so what is your strategies there, Ken Hum? Chi Weng buys at 1. So you're buying that one, right? And your stop is at 5. Okay. And Ken Hum is going to buy 2. If it gets there. And then your stop, you said, would be at 4 if that one fires, okay? So that's your trade frame. I'm not going to ask you about second positions on this one. All right, so you're both in. Now, Chi Weng, your stop is at 5. Do you move your stop? And Ken, you probably haven't moved your stop yet. Tell me if you move your stop. Oh, you're waiting for the PSAR? Okay. Now we have an interesting condition. We have a Z3 excursion. It's above the previous Z3. You guys have both locked in some gains. Ken Hum, this is your gain. Chi Weng, this is your gain. This is your gain on your initial risk. Ken, this is yours. How far? Let's see. Chi Weng moves his stop to no lose plus dinner for 2. I'm going to estimate that to be approximately here. So that's going to, I'll say approximately there. Ken Hum, are you moving? You doing anything with your stop? Ken Hum moves his stop also to 3. Okay. So there we are. We're a little further up the stack now. That's the 2-bar low. That's the 1-bar low. This is halfway up the stack. This is really aggressive. Ken Hum, what do you do? Let's see. Ken moves his stop to 3. And Chi Weng moves to 1. Okay. All right, Ken, you're out. And so your gain was just about almost 2 execution hours, maybe a little less. Chi Wang, do you leaving your stop at 1? Or are you taking it at 2? Stay at 1. Rock steady. Ken Hum, if we had more time, I'd say, what's your plan for re-entry if you have one? Would you re-enter here? Let's call that one. Would you re-enter at 5? And would you re-enter, or would you re-enter? I'm sorry. I could see how you might be convinced to re-enter at 4. Make your decision, Ken Hum, if you're going to re-enter. And make your decision if you would get short anywhere. Like, would you get short at 1? Chi Wang, let's see. Your stop was at 1. Those are all places that I would consider. 2, 3, 4, or cash it at 5. Or maybe, yeah, I'll put 5 right here, just ready to exit if it has any kind of weakness. So Chi Wang moves his stop to, damn it. Why not that? That was to 3. All right. His move is to there. So you've locked in this gain so far. All right. Ken Hum, did you re-enter? I'll trust you to. Yeah, Ken re-entered at 3. And with a risk probably here below the dragon. Is that fair? So Chi Wang, you're out. Ken, you're still in. And with a pretty good re-entry. So wherever you decide to put your exit, Ken, whether it's here or here, you'll make money on that second re-entry. And Chi Wing, you got a really nice trade. You got almost 3R out of that play. Okay, so well done, fellas. Is that kind of case study helpful to you? For everybody in the sound of my voice? That's what trade management in adaptive trading is like. There are hundreds of those case studies like that over the past year for swing trades and for day trades in the hybrid course. Tons of those. And you can replay those Just download the video and, hit the pause button and make your decisions. That's the best trade simulator that I know, is the actual market itself. When you have accountability partners, imagine you're in a 3 or 4 person group, and each one of you prepares one case study like that, and you take turns going through the process just like I did. That costs you $0, and it leverages the power of a learning group. You just don't know how powerful that is. Okay? With a little bit of practice, it's pretty easy to do. Okay. Let's get back to business here. All right. Weekend report review. So we are still in bullish quiet. We're overbought long term. We came back a little bit today on the 2-day, so we're just above average. Still holding the things that we're holding. Those are all doing well. Theoretical exposures at 100%. The breakdown in risk Z is happening, though. Those last 4 or 5 days has really put us at risk, and we're starting to get in dangerous territory here to the 0 line. Monthly in a doji, in between Z2 and Z3. So for me, that stop at 360 is sacred. I will not let it go below 360 on any open position. Weekly health check. Here's what 360 looks like on the weekly. It's a 2-bar low and the edge of the dragon. This week was a bit of a downer. Started off well, pushed incrementally higher, and then just has not been able to hold. But it's still within the regular range. But the last time it did that was here and sold off. Except for here, it recovered, and then the next week was up. It gave us a 2-week up, I should say. So it's kind of a mix. This down week was followed by 2 more down weeks. So, yeah, 1 week doesn't make it a bear market, but that's why, to me, the 2-week low, that 360, to me feels pretty important. If you gave it a wider, I can't see you letting it give back more than the PSAR on the weekly, but that's not bad. That's at about 345. Z1 is splitting the difference at about 352, 353. Any of those is legit. I could also see how you might want to be very strict with the 1-bar low. Like if it took out the 1-bar low, and that would be about 362. So those are the 4. So Ken Hum, I'll ask you, where do you put your stop on that one? And that's all it is. That's all trade management is doing that routinely. So the same techniques that we just worked through on the intraday charts and using those indicators, same one that I'm doing on the weekly, monthly, and the daily charts. Just the time frame's different, how often I make the decisions. But that's the power of fractal sense making with this indicator set. They always mean the same thing in context. Just the time frame's a little different. Latin America and the small caps did pretty well this week. Weakness in real estate. Treasuries actually did pretty good, but they've been long-term bad, so hard to say that's a reversal of trend. Tech really was kind of the anomaly, also taking a beating. It's moved down into the middle of the stack. When you add these sector spiders, you get a nice move in energy, is now 3 months long. So the panic is clearly over. 32 ETF portfolio there. We've added, Brazil and oil exploration. Clean energy held up fairly well and is still the dominant performer. Yeah, there's your energy. Disney had the big move today. Did not frame it. Honeywell just continues to quietly get it done. It's in the third position and was up 1.5, 1.67%. Doing pretty well. DuPont's the other one that had a quiet, good week. Biotech looks like the real winner to me. I think metals and mining have had their run already. They are really richly priced right now. Look how the utilities and real estate sector just getting smashed. The defensive plays. Oops, let's go to the market health check. The small caps doing well in the U.S. Taiwan, South Korea, India, Philippines are okay. Latin America has the strength in the Big Ten, along with the U.S. small caps. It's a real shift in the U.S. away from the large caps in the yellows now, down into the small caps. That's a rotation inside the U.S. market that's been underway for a couple weeks that we've been noticing. Biotechs early in their development phase, they are green and white, meaning was good, now great, be ready to exploit new strength. Along with all of the Russell 2000s, all the small cap guys, the value, banking, growth, and then the regular index. That is broad strength in the small caps. I want to jump right to the daily. Let that come up on your screen so we can get through this. We're already an hour and 10 minutes into this. Lots of dojis were formed today. Some big breakouts in Disney. That's Disney's move. And Honeywell, quietly getting it done. I love Honeywell. I bought some when they were announced to go into the Dow and have never regretted it since. Doing well. In the ETFs, quite a few dojis. Only a couple in the auto framer test out well. No breakouts in the NDX, so today was kind of just a quiet backing and filling kind of day. The auto framer has plenty of goodies in line here. Disney was on that list yesterday, by the way. Just saying. McDonald's has yet to move out, and Walmart, so that's... Can they be far behind Disney? The daily squeezes, McDonald's and Salesforce. And Walmart are on that list. I still like energy. That's ready to pop. Most everything has moved out of the summer and into the fall, so this is like the official warning that 3-day rollover is still continuing. There's a little bit of strength here in these instruments in the Dow. I think Apple and McDonald's are ready. And Microsoft was up 1.5% today, so that's good to go. Honeywell and Disney, look at that, 818 on that breakout to the upside. Amazing. Treasuries broke out and Japan broke out, so the defensive plays were a little bit better today. And that's everything I want to cover for this weekend, and enjoy the lesson. I will get the link for tomorrow morning's Sacred Story Exchange for the OWL working group posted with the information on how to prepare for it and how we do it. Then the next regularly scheduled briefing will be 8 o'clock tomorrow night. I'll go over the swing portfolio on weekly charts. Okay, that's everything I got for you. Take good care. We'll see you tomorrow.